Hello, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well and enjoying the long weekend. So, days like Friday are exactly why we focus on planning instead of predicting. The market didn't just trend, it respected our levels, followed the structure, and moved almost textbook as per our plan. In today's video, we are going to break down how Nifty trended cleanly, where our key levels held perfectly, and why patience paid off for those who waited for confirmation instead of chasing moves. Whether you traded from Friday or just observed, there are some powerful lessons here about discipline, risk management, and trusting a well-defined plan. This is the kind of session that builds confidence not because we got lucky, but because the market behaved exactly the way structure suggested it would. If your goal is to trade with logic instead of emotions and to build consistency instead of chasing quick wins, then you are in the right place. Make sure you hit the like button, subscribe to the channel if you haven't already, and share it with someone who would like to trade with clarity instead of confusion. And before we get down into today's analysis part, uh, I have the link to the Telegram channel in the pinned comments. It is just another mode for me to connect with you guys, wherein I would want to share my news and views related to the stock market. And there will never ever be anything sold to you via the Telegram channel. No trading tips, no courses, no premium channels, nothing at all. Absolutely just another means or mode of me getting in touch with you guys. So make sure you click on that link and subscribe to the channel as well. And we'll jump straight into the analysis part. So, what we had discussed for Friday was that we are clearly in a volatility compression area, wherein we can see that the prices were initially moving in a bigger range, started to consolidate. And like I had always told you, that it is very, very important to look out for these volatility contraction areas because once market, it acts like a spring, right? Once you compress or press a spring together, the more you press it, and once you release it, it jumps even higher. So that is exactly the phase in which the market moves as well. So volatility contraction is followed by volatility expansion. And as option buyers, there's nothing that we can uh, expect more to be happy about than volatility expansion because that is when option buying trades give us the most good RRs. So yeah, so on Friday, the markets actually opened with a gap up. And the first 5 minutes candle suggested that, okay, we are in a bigger range. And if you see almost till about the breakdown, which came around 11:40, from the start, the entire price action was within this particular range as well, right? Meaning again, sideways price action at the start of the trading session. But then we broke down below the trend line. Now, there are two ways to look at it, honestly. There is one entry which can be planned immediately as we are breaking below it. Why? The number one reason is that before the breakdown, we were consolidating in a sideways range throughout that particular trading session for a long, long time, right? So this is something which can be done, but then again, of course, comes with its own set of risk and not the best strategy to deploy trading breakdowns or breakouts basically. And that is the reason why I did not take this particular trade at the break of this particular channel. Although I was highly inclined to take this small risk, wherein the stop loss would have been just below, just above this particular swing, and we could have entered out here. But then I decided to wait for a pullback. Now the pullback did come in, right? Out here, you can see after the breakdown, a good move on the downside, almost very close to previous day's low. This is where the pullback did come in, uh, and the continuation also came in, right? But the options chart did not give an entry on this particular move. So if you go and check the options chart on Friday in the money options, while the spot chart broke below this particular swing low, the options were trading somewhere around here, and the options chart did not give me an entry. Post this, markets again tried to reverse, and there were some RSI divergences which were observed out here. Try to understand and see. Markets made a new low. RSI did not make a new low. Out here, I entered into a long trade. Now, the number one reason of entering into a long trade out here is Number one, the zone that we are trading in, right? Uh, so we are kind of forming a base and then breaking out of it. And the reason that we are taking this particular long trade or risking some part, although we are in a bear territory, right? Because we have planned a short trade below this break of this particular trend line, but why are we still taking or entering into a long trade out here? Is simply because we are at an important location, which is the previous day's low. Had we been below this particular previous day's low, I would not have entered into a double bottom trade because uh, the zone was not the a good, right? Uh, Locations matter. Basically, locations matter. Out here also, we can see that there was some good buying seen from these levels. So buyers were interested in buying at these levels, and that is the reason why near previous day's low, this is where markets gave a good breakout. I took a portion in this particular trade and took a stop loss of around 25 odd points in this particular trade. I respected my stop loss, and as soon as the markets reversed, I took my stop loss and moved on. Now, the scenario which builds or you try to talk it out of the market is this was a good base formation, again, a sideways zone wherein accumulation could have been going on. People would have been building their long positions. And once this breakout failed. Now, this is a good example of a breakout failure trade wherein we tried to trade a breakout, the breakout failed, and that makes this particular low very, very important for us. And when this low got broken down, so out here, this candle did go back below this but did not close it, got a good green candle as well. And I marked this particular swing low, the 105 candle low, as an entry for any trade on the short side with the stop loss right above this particular green swing. And the confidence to go in immediately in a trade opposite to what you had simply taken is something which you need to be confident about, and you need to understand what exactly is the market doing, right? We are already in a bear territory, and we got fooled and manipulated by the market into taking a trade on the long side. There's nothing wrong in it. Absolutely, you are sticking to your rules and you are uh, taking a trade which follows the rules and the setups that you have. We follow this particular reversal setup where in a move on the downside is there, and then we form a base, and then of course, in if it is supported by RSI divergences, that also adds to your confidence. Plus an important location like previous days low. So absolutely nothing wrong in taking this particular trade. Markets can still go against you, and that is where you need to try to talk to the market what exactly is happening. So all those people who would have built long positions in this entire area, and once the breakout failed, all those people's stop losses would be triggering, and that makes this particular low extremely, extremely important. And once this low got taken out, this was where I entered into puts with a small stop loss, and fireworks were in the waiting. Uh, So this actually, this entire zone was a pullback. After this breakdown, this entire zone was a pullback wherein market manipulated and brought in some buyers. And once there were enough buyers waiting to be trapped in, markets moved, gave the actual move on the downside. And people who would have actually created long entries out here and would have hesitated, taken a loss and would have hesitated or would have been trapped once this big move also came in, right? So that would have been difficult for them to immediately jump into a trade on the opposite side. But these are the times when you need to understand and react immediately, like what exactly is happening. And if you've taken a trade on the long side, it means that you've experienced the trap firsthand, right? So it is not that you're simply seeing on the chart the trap. No, you went long and you got trapped, you got stopped out. And that was the reason why this trade uh, on the opposite side was taken. Number one, it was uh, in line with our plan that we had done. Okay, after breakdown, after pullback, we are going short. And plus, a trap was created out here for people who went long. So, yes, a good trade. Immediately, market gave exploding moves. And like I said, whenever market gives moves which are too good to be true, immediately after your entry, you simply see the profit numbers jumping like anything. That is something wherein you need to book at the slightest reversal in the market. So this is where the 150 candle wherein We got two back-to-back green candles. Although the conditions of my exit were not completely fulfilled, but then again, I exited because parabolic moves like this can be followed by parabolic moves on the opposite side, and then you see those profits vanishing very, very quickly. And I captured around 78 points in this particular trade, if I'm not wrong. The trades were taken on Friday. I did not record this video on Friday. I'm recording this on Sunday around noon. Uh, so. Yes, this is the candle where I exited the trade with 78 points. So one trade in loss, one trade in profit, net day in green, right? The long trade, of course, was taken in lower quantities. Again, it is very, very important for you guys to understand the major sentiment in the market which is ruling, right? So either it will be a bullish sentiment or a bearish sentiment. It is that if you are getting a trade which is opposite to the primary sentiment in the market, you go ahead with lower quantities. Then the trade that you would go take in the trade which is going on in the uh, direction of the bias. So the major bias is right now negative. So, and we had broken down to this particular trend line. So of course, this trade was done in the usual quantities, while this trade, which was a loss-taking trade, was taken in lower quantities. So overall, a good trending day simply being executed because of the plan that we had done, the plan that we had made. Uh, it is simply about how well you connect the dots while in the live market, leaving your emotions aside. If I would have been keenly focusing only on why did I enter into this long trade out here, why did the market hit my stop loss, and I would have been scared to take another trade on the other side immediately, that would have been wrong. What's the worst that can happen, right? So if you are ready to accept the worst, you can be happy with the least possible outcomes as well. And that is what I always suggest everyone to take, or the mentality, the thought process to strengthen your emotions is to enter into a trade while thinking that the worst is going to happen. And that is the reason why I always ask everybody to make sure that even if you do not have a fixed target about where you are going to book your profits, let that be decided by the market. But the one thing that you should be absolutely sure of before swiping the buy order is where exactly is your stop loss. If you do not have your stop loss in point, if you do not have your stop loss pre-planned or entered into the system, if you cannot take or execute market orders when the stop loss are triggered, please put them out in your systems. And that is something that you should be absolutely was that okay, whenever you're entering a trade, the worst will come true. The market is going to reverse and hit my stop loss. And that is the worst that can happen, right? Nothing more or bad that can ever happen. So if you are mentally prepared to take that particular stop loss, so the stop loss is the number of points which are coming as per the swings or as per where you're placing your logical stop loss multiplied by the quantity that you are taking in. So if you are completely okay with the particular stop loss, there's nothing wrong that can happen to you, which is worse than the stop loss. And that is exactly how you venture into and capture the big moves. And you get the emotions, which are the fear, the greed, you get them out of the system. So yeah, I hope the trade plan of Friday and how we executed it is well explained. And now before we plan the trade setup for Monday, Monday is the holiday for Tuesday. Uh, yeah, happy Republic Day to all of you in advance. And whoever is watching this video, Tuesday is the monthly expiry of Nifty, the January monthly expiry, and whoever is trading Nifty and into option buying, like me, please make sure that you shift your trading to the following week's expiry. Do not trade in the options which are expiring tomorrow. Apart from the Hero Zero trade that we take post 2 p.m. based on the open interest and change in open interest. If that triggers, that will trigger in on an average in 1 in 4 expiries. And if that thing happens, if you see those changes in the open interest and you think that somebody is getting trapped, be it longs, be it shorts, and if you can want to make use of it using the expiry setup that we have, make sure to uh, trade that particular trade in the options which are expiring on that expiry. Otherwise, rest of the trading throughout the day should be in the options which are expiring the next week, you will be paying a slightly higher premium for your entries, but then you will be doing your capital a very much needed favor, even if the market goes sideways. Like this, in case if you would get got an entry out here and market would have gone sideways, this is expiry day, you will not lose more compared to if you're trading in the current expiry, right? So I hope this is a tip. Uh, Whoever wants to take it, take it. It's for your own benefit. Uh, Now for Tuesday, we again start with the weekly because Friday the weekly candle has closed. And if you can see on a weekly time frame, this was a good double top which had formed right out here, also inviting fresh new buyers while the high was broken out. A new all-time high was created, and then the buyers were invited, and then this double top formed. And you can see, even if somebody would have played positionally, right, simply bought puts around the end of this week, ending 5th January. Throughout January, it would have been negative. Ignore the volatility on intraday basis, but then, of course, at the end, you would have made some good handsome money. But then again, it is like very difficult, and I do not actually suggest to trade option buying based on holding trades, right? Option buying should be limited to intraday. It removes only quick entries and quick exits. Of course, nothing spectacular on the charts. Things aren't looking nice. Although on Tuesday, we might see a gap up opening based on the news that is coming in about US some Treasury Secretary stating that the 25% tariffs on India has been decided. It has been decided that they're removing the tariffs and whatnot. So again, we might expect a gap up opening and there can be some volatility. Uh, this is the good swing that we can see. Yes. So we'll just simply use this swing. I just I was just navigating between different time frames to try and find out which time frame has the cleanest swing so that we can use them to draw our fib levels. Because even if the market will do what it has to do. It is up to us to prepare us for scenarios on both the sides. So yes, this will be the simple, clear trade plan for Tuesday. Number one can be a trap happening out here at the bottom. So if we see at the start of the day a good bearish candle inviting fresh new sellers or shorters out here around these area, and then the high of that candle gets taken out, we can get a scalp trade on the long side. In case of a breakdown below this with a pullback, of course, we can look at a short trade out here. If we open with a gap up and we are trading inside this zone and we reach these levels and then we see a good uh, bearish pattern forming, whatever it is, I'm simply drawing it because we simply do not short the markets as soon as they reach a resistance level. But then we wait for a good confirmation, and if we see them, we can take a good short trade out here. It is only above this that I will be looking for a trade on the long side. I will be keeping my trade plan very, very simple. And yes, we are approaching key levels out here as well, where there is an impending gap area, plus some good swings which we had marked previously on our chart. So once we are near those levels, so they are still around 600 odd points away, we will be doing our analysis. But for now, I think this should be the simple, clear trade plan for Monday. Of course, we needless to say below this particular swing. So these are the two doji days that we have. So this is 21st of January, 21st of January, the green doji followed by a red doji on the higher end. So these are the two dojis that we have. So of course below 24,922 also again there is some pain in the market below this particular low as well. So let's see how we open on Tuesday. The weekend is still there. Please make sure you enjoy and have a good time with your family. So, to wrap things up, Friday was a perfect example of why Structure, levels, and patience matter more than predictions. The market respected our plan, gave clean moves, and rewarded disciplined execution. And that's exactly the kind of consistency that we aim for. If you found today's breakdown useful, make sure you hit the like button, subscribe to Your Nifty Guy, and share this video with a fellow trader who's serious about trading the right way. Drop your views in the comments. Did you catch the move on Friday, or are you still building your confidence with structure-based trading? I'll see you on Tuesday with another clear market plan. Until then, trade safe, stay disciplined, and remember the market always rewards patience and preparation. I will not be trading on Tuesday. Yeah, another thing, I will not be trading on Tuesday. I have a SIR, the voter list, reading the deletion of fake voters, whatever it is. The SIR hearing on Tuesday. So I have been asked to produce my documents to the Election Commission of India's spokesperson. So I will be there. So the time is very odd between 12 in the afternoon to around 2:30. And I don't know how long that's going to take. So in case if I get a trade in the first half before this particular time, I will be taking some trades. But then post 12 p.m., of course, I will not be in front of the system and I will not be taking any trades. So most probably this expiry will be a no trading expiry for me. But then my best wishes to everybody who is trading. Make sure you stick to your rules. Uh, be disciplined, and I'll see you in the next video. Cheers, guys, and thanks for tuning in.